Greetings to everybody who are watching this lecture. We are discussing contract costing. The previous 5 sessions we went through contract costing concepts and basic problems in great detail. We will start with the escalation clause theory concept. Meaning of escalation is increase. Generally, due to inflation, the cost goes up, and in case of fixed price contract, contractor carries the risk of increase on cost due to inflation because it is long-term contract. Nobody can do the future prediction with perfection. I'm going to charge you fixed price, so my revenue will be predictable, but the cost will be unknown. If the price rises, I may suffer a loss. To protect himself, the contractor demands that the contractee add an escalation clause in the contract. This is one of the conditions in the agreement to protect against future rise in prices. Through which what contractor tries to do? He tries to pass a sum of the burden of increase in the cost to the contractee. So he will tell to contractee through escalation clause that you will pay me fixed price which we have decided, but fixed plus you will pay me extra towards escalation clause, that is your share of increase in cost. Now, escalation clause applicable to which item of cost that has to be mentioned in the contract. Example. Let us see general example of escalation clause. Suppose a contractor says that in case if the price of cement, if it exceeds rupees 400 per bag of cement, means up to 400 per bag, I am ready to bear the cost. But if the price goes beyond 400 per bag of cement, then you will share or bear. You will means contractee. Let's say 50% of such increase beyond 400 per bag. Just I created some example for you that you will bear 50% of the price beyond 400 per bag. Now suppose the actual price of cement bag is, let's say, 450 per bag. I have the invoice to show that I have purchased it 450 per bag and I have consumed during the year in the construction 1000 bags. Now we don't do 1000 into 450 because out of 450, 400 I have to bear. The escalation clause is applicable for price beyond 400. Beyond 400 is only 50 rupees. So we will do only 1000 into 50 equal to how much? 50,000. This is the increase beyond 400, and out of this I will pass only 50%, that is rupees 25,000. It means contractee will pay the fixed price which was agreed plus 25,000 more as per escalation clause. Class notes. If the price of labor, materials or other items rises beyond a certain limit, then contract price will be increased by the agreed amount. This is known as escalation clause in a contract agreement. In fixed price contracts, an escalation clause is included to safeguard the contractor against the risk of increase on cost due to inflation. By including an escalation clause in a contract, the contractor transfers some risk to the contractee who agrees to pay that amount in addition to the contract price. In cost plus contracts, there is no chance of an escalation clause. If there is an escalation clause, the de-escalation or reverse clause naturally comes in. Meaning that if material and labor prices fall below a certain limit, the contract price will be reduced by a certain percentage of the price decrease below that limit. Dear students, thanks for watching. If you have a request for a specific chapter to be taught, please leave a comment and I will take into consideration.